Welcome back, everybody. You got Will and Iron here from the Block Runner MetaZone, Roby and MScribe, and today we're going to be talking about some stable coins. That's how we make real money, Iron.
Sounds like the most interesting of things to talk about, dude. Which it's weird, right? I never would have thought like stable coins would become. Well, they've always been like pretty important for sure, right? Yeah. And contextual events of crypto past, you know, it was like one of the catalysts for the downside of last cycle, Terra Luna collapse and such, and people got a little too funky, a little too crazy with their stablecoin ideation.
Yeah, that was just a prototype, dude.
It's a prototype of what we're about to experience ahead, potentially, right? According to some expert opinions.
Yeah.
Right? But yeah, you think stablecoin, you think snooze-a-thon, right? It's literally per the name. It's a stable coin. What? Yeah. Where's the interest in that? Like something that does nothing.
Yeah.
Somehow this is festering into potentially one of the more bigger narratives of this cycle and like actual industry shiftenings happening beneath our feet.
Yeah, it's almost as if the industry, or at least the traditional industry, the traditional finance, is understanding how the hell does Tether make billions per quarter?
Yeah, that's the real breakthrough headline, right? It's typically that. Like anytime a new facet of crypto rail or technology is like brought to market, it experiences like these like lullish periods where like nothing is happening, nobody really believes in it until something generates a headline like you just said. Like there's this stable coin issuer that's outperforming countries and they're like whatever. Like
their income.
Their enterprise value. Yeah. It's insane. So yeah, the world is scrambling to understand how do they do this.
Yeah, and then when you look into it, it's like they're a stable coin. How do you generate billions of dollars on a stable coin?
Yeah.
And that's you take in fiat and then you buy country debt. And then that's how you make
that's the new revelation, right?
Yeah.
Like I remember like earlier on this was like experimentation. Even like MakerDAO was doing their DAO.
Yep.
Proposals to buy up Treasury bonds and stuff to strengthen their collateral yield and stuff. It's like, wow, that's kind of neat. That was like several years ago, but like now it's festered and snowballed into like a whole systemic operation essentially. And it comes at the perfect time when the United States is like clamoring.
They're looking for buyers of, can you buy my debt?
Yeah, as the faith in the dollar is eroding and lack of interest in from the country perspective, I guess, the macro perspective.
Yeah.
We got this new industry kind of like swooping in to supply some of this.
So if this turns out well for the United States, where we have several stablecoin issuers for the dollar, I think the dollar ends up winning for the next 100 years.
That's the hope, right? But of course, us here on this channel, we're always focused on, the pulse of the crypto markets. Typically, right? We started this channel. It's a crypto channel, right?
Really? I thought it was a sports channel, dude.
No, definitely. We haven't made any good sports predictions in the past. We made plenty of good crypto predictions in the past.
Yeah, we did.
You know, I wouldn't have predicted Halliburton's fucking tendon just snapping. Actually, I predicted the other way.
You did.
And I lost that bet. So definitely don't consult me with sports advice, dude. I didn't think that was going to happen. I thought it was going to be like a Cinderella story.
Yeah.
Underdog, but no. Reality strucketh once again. Dude.
Yeah. Thank you, Achilles.
Thank you, physics, biology, and such.
All right, so let's get back to stable coins, and let's look into all these tabs that we have. It'll be in the description below. So Google Trends, Bitcoin, search interest returns to levels seen during the $16,000 price era. So far, nobody cares about Bitcoin at $100,000 price.
Yeah, it's just an extension of something we already understand, right? Like us retailers, we're essentially priced out of Bitcoin in a sense. Like it's just there's no interest to us as far as Bitcoin this cycle. As in cycles past, Bitcoin was heavily regarded as the onboarding mechanism for crypto, right?
It was, yeah.
It's no longer the case, right? And therefore, there's different different behaviors.
Yeah, look at these patterns. This is imagine the 4-year Bitcoin cycle are over. No more retail FOMO, but institutional structured bid. So we have like parabolic curves for each of the last 3 cycles, but this one has not been parabolic at all.
Yeah, it's completely, I like the terminology here. It's a structured bid something more palatable, I guess, for institutional players, right? Before it was purely retail driven, which is a lot of hype,
Yeah.
a lot of the feeling of missing out. Therefore, like you got these rapid influxes in price action, and then the painful corrections ahead. So the speculation is this like a new order? Bitcoin is losing its
Yeah.
rhythmic nature to it, and it's much more of like a structured, only go up asset. Kind of like, if you look at the S&P, it's kind of the same thing. It has these,
That's true.
it's only go up, and it has these 30-40% pullbacks.
Yeah.
But it's like a structured bid on the way up to infinity until like the music stops or something.
Yeah.
It's kind of like how institutional money flows.
Dude, that's
right?
crazy if that's what Bitcoin becomes.
Yeah, it's just one. So you definitely don't want to like try and time market tops and bottoms
No.
anymore. You just stay
in.
Stay in.
Yeah.
Yeah.
Yeah, I totally agree. All right, so let's take a look at what Swan is saying. Bitcoin feels different this cycle. Volatility is low. Dips are shallow. Momentum is slow but relentless. Some say the 4-year cycle is dead. Others say it's just evolving. Let's unpack the data. We have the halving. We got the hype, the blow off top, and then the 80% crash repeat. We've seen that for 3 years straight.
Yeah, you scroll down, there's like an image here that represents this right here.
Yeah. It says Brad Mills calls it the sailor cycle, an institutional arrow where disciplined capital steadily absorbs float. The pattern quarterly rebalances, not initial mania, silent bids, no sell button, Bitcoin behaving like a scarce strategic asset.
Yeah, we lived through most of these previous cycles, right? And
Yeah.
it was definitely retail driven. And like we just saw, retail has zero interest in this stuff, at least for now. Maybe the interest will potentially come back in as this institutional buy pressure, I guess, festers to a point where it's just unavoidable. Like you have to like come back in at some point, right?
Yeah. So if this channel were to continue, I mean, this is 2031. Assumes it continues, but it'll reach 3 million. So what is that? 6 years from now, 3 million is the top. I mean, it sounds about right. I mean, I think
sure.
it follows the curve,
Sounds about right.
the rainbow curve, pretty swimmingly there.
So we'll see, dude. The sailor cycle. It's a decade of just
Only up.
It's like a new financial paradigm, right?
Yeah, so Rivers says businesses are the largest net buyer of Bitcoin so far this year, led by Strategy, which makes up 77% of the growth.
Yeah, so this just shows the changing dynamic, right? Like huge individuals are no longer like the biggest like holder base.
We've been calling this since the beginning of the podcast, which we did 5 years ago, 6 years ago,
6 or 7, almost. Yeah.
Man, we said we had retail going into crypto, then it's going to be companies, and then it's countries. Countries been talking about getting into Bitcoin as of late, but they're not getting into Bitcoin yet, right? It has to get through Congress and all that stuff.
Yeah.
Then they'll get into crypto or Bitcoin specifically. All right, Solana. Let's take a look at $1 billion in app revenue over the last 2 straight quarters, 3,200 monthly active developers, and $800 million in quarterly validator rev.
Yeah, so this is just like a scope of the situation happening on chain, right? Because if Bitcoin's no longer the vehicle of adoption, right? This is just a pure institutional play at this point. Well, then the on-chain market should be that, right? And as we could see, they were for a little bit here. This is. I mean, what do you react to this this visual here?
Well, either we're going to see a little lull period, or this peak is really just the beginning.
Yeah, that's kind of what I was
hoping,
identifying myself too, because this is what we're looking at. Because our vector of participation are these on-chain markets, right? 2021 cycle. Mm-hmm. That blip you're seeing there were largely driven by NFTs and DeFi on Ethereum, right? That's why Ethereum is essentially driving the market there. And then you fast forward to recent times, not so much, right? Because NFTs and DeFi, not the killer driver of on-chain volume in this day and age, right? The modern mechanism of volume generation has been meme coins,
memes,
right?
Correct.
And through the utilization of bonding curves and other bootstrapping liquidity mechanics, yada yada yada.
Yeah,
most of this stuff was deployed on the green bar, which is
Solana.
So that kind of tells a tale. So it's either maybe as an on-chain market, we've already experienced our blow off top moment, and you're right. Maybe we have a couple years of lull ahead of us until we figure out the next on-chain component to really capitalize on a new, new wave of volume. Or not, it's just the first blip in a continuation, right?
Yeah, I mean, I don't think things are over yet.
Yeah, but if you look at crypto Twitter,
it definitely feels over.
Feels pretty sad and bleak, right? But that's what's the interesting dichotomy we're kind of trying to demonstrate here. It's like there's a difference between what's happening on chain and what's happening in this newly brewing market sector, which is like the IPO markets of crypto, right?
So the crypto degens out there, they may be sad, but Trump is not sad. Look what he said. The Senate just passed an incredible bill going to the America undisputed leader in digital assets. So this is referring to the Genius Act. Digital assets are the future, and our nation is going to own it. We are talking about massive investment and big innovation, and the House will hopefully move lightning fast. Genius Act, get to my desk ASAP, no delays, no add-ons. American brilliance at its best. And this is how we show the world how we win the digital assets like never before. So now we got Trump pushing digital assets, and we're going to be talking about stablecoins and like what that means. So let's move on here. And we have Treasury Secretary. Recent reporting projects that stablecoins could grow to 3.7 trillion market by the end of the decade. A thriving stablecoin ecosystem will drive demand from the private sector for U.S. Treasuries, which back stablecoins. So now we have a private sector brewing, collecting fiat currency to issue stablecoins. So it's a win-win for everyone, the private sector, the Treasury, and consumers. And so that's Treasury Secretary Willie Woo here chimes in. It says 2014 Tether was founded solving the banking issue for crypto while banks denied access. Today, it ranks 5th most profitable above Morgan Stanley and Goldman with only 100 in staff. So you look at the profits here, $58 billion for JP Morgan, $24 billion for Bank of America, and then number 5, Tether, $13 billion.
And look at their employee counts, dude.
Yeah, with 100 employees.
Yeah, this is weird. And this isn't expected to stop anytime soon, right?
Yeah, I mean,
for Tether, at least like in the net profit category, right?
Yeah, Tether's in a position to where there's momentum trying to repeat what Tether is doing right now.
Yeah, there's this perfect storm scenario brewing where this Tether has unveiled this killer product market fit for crypto in a sense, and along with that is addressing like a macro problem, I guess, for the United States, where there's like a lack of demand for these treasury products and such, and now they have this new, reasoning for acquiring these things to supply a whole new market dynamic, right?
That's
and then
right.
On top of that, you got a president and Donald Trump who's like very supportive of these things, whether it's like, well, it's definitely financially motivated because his like family is directly involved in this stuff.
Yeah.
But there's even like a deeper backstory to that where he has like a personal vendetta against the existing financial infrastructure because of like him being debanked. I think after like the June 6th stuff, like there was quite a systemic attack against him and his family. So he's got like a bone to pick. So he sees these DeFi, these stablecoin.
So he's like emotionally motivated, but also profit motivated, and he's a president, so he gets to
hence you get these like these new laws that are coming in place that are very heavily skewed into enabling more of this stuff to happen.
Yeah.
Right.
Yeah. So Circle is part of the mix here, obviously, with USDC is rampant. It now trades at 348x its yearly earnings. So this IPO
like a month ago, or
like
something.
a month. Yeah, not even a month.
So now we're not talking about Tether anymore, but it's the same product, right?
Yeah.
USDC and USDT.
Yeah.
What do they do? Like, what's the function of these products?
They're essentially an aggregator of fiat currency. They put it into a bank. That bank purchases treasury bonds.
Yeah.
And that treasury bonds has a yield, and then they just earn yield on a quarterly basis, and they make billions.
So their objective is just to get more capital.
Yes.
So that they could just keep issuing more of these digital dollars, essentially.
Yeah.
Which, from the United States perspective, is good because that means it strengthens the value proposition of the dollar itself, right?
Yeah.
They want more of this. Circle and Tether obviously want more of this because that means their yield generation goes up, revenue go up.
Yeah.
I mean, it's quite the perfect flywheel here that they're brewing, right?
Yeah. I mean, in an environment where not a whole lot of countries are buying U.S. debt anymore, we have institutions like Tether and Circle buying it.
Yeah. So the result of this is you got pretty inflated market caps, some would say. I mean, what did it go back to the previous tweet? What did it say? It
said
340x.
348x
earnings.
Yeah, so Circle's IPO price is 340x times the yearly earnings that they make.
Yeah, and it's their market cap, at least their IPO market cap, is above the market cap of the actual stable coin. That means how many dollars are in circulation, crypto dollars.
Yeah.
And then you got Coinbase too, which is interesting. It's like right there neck and neck with Coinbase. So either Circle is super overvalued or Coinbase is super undervalued. I don't know. What do you think about that? Because Coinbase doesn't have its own stable coin, does it?
No, it doesn't. But they collaborate with Circle.
They do.
Yeah, I feel like Coinbase is definitely undervalued in the context here. But yeah, 348x, its yearly earnings. This is not typical for a public company.
Right. But it's a data point that we need to absorb, right? Because we're trying to identify, like, at what stage is this, like, market mania, right? Is it the beginning stages? Is it somewhere in the middle? Are we, like, literally days away from a blow-off top?
Yeah.
Like, that's really what we need to do here.
Yeah, and more evidence, Plasma says there will be no further increases to the deposit cap. Total deposits are now limited to $1 billion. The goals of the deposit period were clear: enable broad global participation through a fair process, prioritizing real users over bots, and bootstrap day one stablecoin liquidity for Plasma mainnet beta. We've achieved both. And so what does that platform look like? What does it do? It's a blockchain for stablecoins.
Purpose-built blockchain for stablecoins. That's right. We're in the app chain era, so people like to build chains pretty, like, freely these days.
Willy-nilly, just for everything.
Yeah, but you need, typically the ones that succeed have some sort of killer product, like Hyperliquid, has a good perpetual DEX user experience, I guess, generating billions in volume. Let's build a chain around this, right? These guys, they see there's quite the market brewing for stablecoins. Let's build a chain around it, but with our own, like, stablecoin product, right?
Yeah. Yeah. So, yeah. I mean, this is part of the mania part. If, like, you expect a mania in this is what you would expect.
I totally agree. Yeah, because, like, we're seeing a lot of this stuff is trickling to, like, TradFi.
Mm-hmm.
So it's like, how does the on-chain markets kind of, like, play along?
Yeah,
play
exactly.
in these markets.
All right, Cointelegraph, BitMEX co-founder Arthur Hayes calls Circle's IPO the start of a stablecoin mania bubble. He warns most new users will be overvalued. Most issuers will be overvalued and doomed without distribution via crypto exchanges, banks, or social media giants. So that's just a precursor to what we're going to talk about towards the end. But look at this. OKX is reportedly considering an IPO in the U.S. following its U.S. relaunch. It says in April? Was that next April? That's kind of weird. Per the information. So, OKX. Now, Anthony Pompliano, he's announcing a $1 billion merger to create a pro-cap financial Bitcoin native services. So Anthony is also getting into this mix. As part of the business combination, I have raised $750 million with its which is his largest initial fundraising in history for a publicly traded Bitcoin treasury company.
Well, this isn't necessarily a stable coin. This is the Michael Saylor approach, right?
Yeah, Michael Saylor approach for Bitcoin.
Another shell company becoming essentially just a way for traditional capital to flow into Bitcoin.
Yeah, and the alignment here is the fact that the traditional finance, the IPO sector, is getting exposure to Bitcoin, getting some stablecoin action now.
Yeah, so we got multiple vectors for, like, the equities game in relation to, like, actual hard crypto fundamentals, essentially. There's nothing more fundamental than the value of Bitcoin in relation to crypto, right? So you've got your pretty well-established mechanism to bring that to market, right?
Yeah.
Just create a shell company, raise a bunch of money, buy a bunch of Bitcoin, and IPO that shit. And just number go up for...
Yeah. Now,
however long.
yeah. So you have essentially paper money in the traditional sense, and that paper money is like 401ks, all this like traditional financial instruments can now purchase and get exposure to crypto through these like shell companies, and so it's a pretty reasonable business model.
Yeah, and it plays into what we're talking about. The factor in the macro climate, the regulatory climate, and then just the overall narrative and the excitement happening around this. Like it's like an institutional cycle for Bitcoin and crypto in general, but stablecoins being that showcase crypto product market fit that's like palatable, right?
Yeah.
You can't really bring memes to the IPO market, at least not yet. I wouldn't be surprised.
There's some meme stocks out there, but it's not to the same extent.
Well, I mean, like an actual meme that's like,
yeah, that's true.
Like a Treasury company becomes like a meme holdings company, and now you've got the traditional equities markets like speculating on that.
See, now that would be the top signal of all top signals. Like a shell company buys Fartcoin.
Yeah.
Yeah.
I would add that to the list of what to expect, right? Because if this cycle really is like a retail exclusionary event, meaning like retail no interest in buying Bitcoin, in order for retail to participate, you've got to be in the equities markets. It looks like that seems to be what's brewing here. Right?
Yeah. So Arthur Hayes, we have come full circle. What a glorious day! The 2017 ICO ethos has been transmuted to 2025. So this is 2025's crypto IPO phase. This is the start of a mania. It will end with EOS-like blockbuster IPO that extracts insane amounts of fiat capital and tanks on open. So remember, EOS was a year-long ICO, and they acquired $4 billion worth of ETH, which they converted into Bitcoin.
Yeah.
And now they have, what was it, $14 billion worth of Bitcoin?
Something like that.
Yeah, so they converted $4 billion in ETH to $14 billion in Bitcoin.
Yeah. And their chain is essentially a ghost town, I think.
Yeah.
Per last check-ins.
Yeah.
But yeah, it is the poster child of like crypto market exuberance. Like the fact that even in that time, in 2017 ICO era, like that there was that much capital around to like, because keep in mind, that wasn't the only ICO. Like during that year of ICO absorption, there were like hundreds of other ICOs happening simultaneously, also raising tens of, if not hundreds of millions of dollars in capital. So it was quite the liquidity suck.
Yeah.
Right. So Arthur Hayes, he's predicting something of similar nature to kind of fester within the traditional equity markets, right? And maybe this chilling footage.
This is horrific, dude.
Is it? Is this? You guys let us know. Is this horrific, or is this like this is it? This is the beginnings of a new paradigm.
Yeah. So let's read. It says, "Wait a second." Van Eck opens the market, and right there, alongside them, a punchy penguin.
Look at that little fella just bopping around, dude. He's like, "Yeah, we got you, got you." Fucking graybeards, dude.
Yeah. In the middle of ETF season, market volatility and global headlines, we got a Web3 native brand up on the stage. Yeah, so it is pretty interesting that we have the IPO launch and then Pudgy Penguin just dancing away.
Yeah, so like traditional me would see this and I'd be like, dude, sell everything.
Yeah.
But per the nature of, again, all the data we've aggregated so far, it definitely feels like this is just getting started, right?
Yeah, and Arthur Hayes. So we definitely recommend you guys to read this article from Arthur Hayes. It was just released a couple days ago. But he outlines how this mania would probably look like, and he suggests there's like a comment here at the end. It says, "Do not go short. Even though that this mania is happening, the new stocks will rip faces off shorts. The macro and micro are in sync."
Exactly. And it's kind of like one of the things, we have an unfair advantage because we've been trenchers for years now in these markets. We understand how, these types of narratives, they could fester and they turn into exuberance and manias and typically that translates into short-term, like, rapid volatility and outsized capital gains opportunities, right? Because, the market has figured out a new class of mechanisms to generate,
outsized gains
and participation from institutional buyers. In this case, in previous cycles, it was retail participation.
Right.
So definitely go through this. He kind of outlines his vision as far as what that's going to look like, what these participants, aka potential grifters,
yeah
they're gonna do. They won't look like grifters because they're gonna come with suits and like accolades of like 40 years in traditional finance. So they're coming in here to harbor your U.S. dollars responsibly, and they're going to participate in this new financial paradigm that you have the opportunity to kind of like be in the underclass of.
Yeah.
Therefore, buy my IPO.
Right.
Shit like that, right?
Yeah. And so Arthur Hayes talks about Terra Luna, and it talks about Meta. Remember Meta? It was like
Libra?
4 years ago.
Yeah, Libra.
They were trying to launch Libra, which was like they called it a basket of currencies.
Yeah.
And they collected all kinds of fiat currencies from different countries, including even cryptocurrencies. And that would back the Libra. Mm-hmm. And so that didn't work out. Terra Luna didn't work out. And so Arthur Hayes is saying you're going to see probably a bunch of Terra Lunas.
Yeah.
In this cycle, based on
so.
what the activity that's happening.
You might even see Libra tried again. It just wasn't the right macro
or
regulatory timing for that. Zuck was just too early.
Yeah, Zuck would probably be successful with Libra now.
Yeah, and we already know X has ambitions to integrate, crypto rails and stablecoin payments and such. So we're going to see an interesting explosion for stablecoin adoption and the ultimate bull thesis for all of us, because we want to figure out how do we participate. How does this trickle down to our level?
Yeah.
Right, because we're not institutional graybeards. So we're not over
we
there
don't
ringing
have
the bell.
401ks.
Yeah. So what do we do? Right.
Right.
The good news is if stablecoins become this new wave of like adoption vehicle, essentially it's bringing liquidity on chain somehow, some way, some shape or form, right? The more holders of digital dollars versus physical dollars means like the broader gateway access to our on-chain capital markets.
Much bigger.
Yeah, the scope of the on-chain market can grow. It's just a matter of can this side of the market develop actual products that warrant that transition flow of value from traditional finance back to decentralized finance.
Yeah, and I feel like that's always a challenge. And I feel like now's the time to actually develop those apps.
Yeah,
and start experimenting.
Well, we're in that on-chain lull phase, right? And then everything over there is just booming.
Yeah.
But yeah, as a retail participant, though, I'd say do your due diligence. Like Arthur Hayes suggesting, don't short any of this stuff because, that side of the market doesn't know what's coming, but we know.
Yeah.
Right? They're going to see these guys in suits and think it's the next paradigm. But but at the end of the day, it's all going to come crashing down because it's
not sustainable.
Yeah, and it's not organic the way Tether and Circle was, right? These are the following acts that are chasing like a new rush of liquidity.
Yeah, and just to put a cap into it, he quotes the CEO of Citibank. He says, when the music stops in terms of liquidity, things will get complicated. But as long as the music is playing, you've got to get up and dance. We're still dancing.
Pretty much.
And so he's referring to the financial market collapse in 2008.
Yeah, that's what I'm worried about. Maybe we'll talk about it on the podcast more in depth of like, this is all fine and dandy and sounds like fun, but I don't like the financial entanglement between all of this and like, the bonds markets and stuff like that and U.S. Treasuries. To how bad this can fester and snowball, does this introduce like a new systemic risk for like the entire capital markets for the whole global economy? Now that would be one hell of a bullet point of crypto history. Like,
if you
2008, it was the housing bond market that crashed the U.S. economy or the world economy. And it's like the crypto stablecoin markets crashed the U.S. economy. Oh, man.
That's perfect.
Imagine that movie.
Perfect story, dude.
Maybe it's the perfect Big Short in the making. Right?
Yeah.
So.
All right, guys. Well, that's it for us. If you have any questions along the lines of stablecoins and how this works, definitely put a comment down below. Also, if you find anything in crypto you find interesting, definitely put it below as well. We like to research and comment on all the comments below. Other than that, appreciate you for watching, and we'll catch you in the next video.
Peace.